But time to connect with Hitesh Oberoi. He's the co-promoter, managing director and CEO of InfoEdge to talk about their near-term outlook on Naukri and 99 acres, what the view is on their margin trajectory, as well as how Ahar has bought out Zomato Gold, according to reports. Well, thank you so much for joining in. To begin with, now post the earnings con call, you had indicated that there is a slowdown in the economy and that's going to pose challenges for Naukri and 99 acres. What's the update right now? How has growth been for these two verticals?
Well, we had a great Q1 and we're not complaining about Q2 either. But business has been slowing down month on month for the last 3 or 4 months now. September was not as good as expected, and October was also a bit slow. So let's see, a lot depends on how the economy sort of shapes up in the next few months. The IT sector has been doing well for us, so that's been a silver lining. The real estate business continues to grow despite the real estate market being slow, but yes, growth has slowed down a bit compared to the same time last year. But overall, we are still not complaining. Business is growing, and we are confident that things will only improve in the times to come.
Recruitment segment as well. Hiring in the non-IT space has slowed across sectors like real estate, BFSI, etc. Tell us, with this kind of sentiment, will Naukri's growth drop to the teens from the 20 plus that we saw last year?
Well, it's hard to say because, a lot of our renewals happen at quarter end. So we'll get a fair sense of what Naukri growth will look like only in a couple of weeks from now. But yes, anecdotally, what I can tell you is that the sales guys have been complaining a little bit. The market has been slow. Like you mentioned, sectors like BFSI, telecom, banking and financial services, real estate, infrastructure, and even travel, tourism, hospitality have slowed down a bit compared to the same time last year, and also compared to 6 months ago. The IT sector was holding, and that's a large part of our revenue. About 45% of our revenues come from IT and IT-enabled services. So that was okay for the first 6 months. We are waiting and watching to see what happens going forward. But definitely business has slowed down, and therefore Naukri growth may slow down a few percentage points from what we saw in the first half. But still, like I said, the situation will become clearer only in the last 2-3 weeks of the quarter because a lot of our renewals happen at that time.
Okay, what about in realty, Hitesh? Persistent pressure, of course. Q2 deferred revenue growth came in, at a multi-quarter low. So does high unsold inventory, some of those funding issues continue to keep volume transactions lower?
Yeah, so real estate has been a terrible story for the last 7-8 years now. I mean, the market has been slow, and on top of that, we had demonetization, then we had GST, RERA, a lot of issues in real estate, and now, of course, the NBFC sort of funding crunch, which has affected both developers and buyers of real estate. So the real estate market has been slow. Prices have been sort of in the same range for about 5-7 years now. So in real terms, they've actually corrected by about 40-50% in many cities. And therefore, what has happened is that investors have disappeared from this market. So nobody is investing in real estate anymore. What we have is end user demand. And for end users, prices actually still continue to be high. If you look at rental yields, they are still very, very low in Indian cities. You can rent a property and at 2%, 3% rental yield in most cities. So many people are still thinking, why should we buy if we can rent at 2%? So the real estate sort of sector will continue to pose some challenges in the near term. We are still okay because, despite all this, because the advertising spend for real estate developers and channel partners and brokers is moving from offline media to online media, and we are benefiting because of that trend. But the market has been, static pretty much for the last few years now.
Okay. So just tell us a little bit as well about what the EBITDA margin range is that you're going to look to sustain in the second half, because it did decline about 90 basis points in the second quarter to about 31.4%.
We don't have a target EBITDA margin as a company. Different businesses are at different stages in their life cycle. Naukri, of course, is very profitable, and Naukri EBITDA margins have mostly varied between 53 to 57, 58% for the last few years. But here also we are investing in a lot of new things, and we would like to continue to invest irrespective whether there is a slowdown or not. In the real estate space, in matrimony, and in education, these are growing sort of segments for us. We are still early in the game in these markets, and we would continue to invest irrespective of whether there is a slowdown or not, because there are some things which we have to build, and these slowdowns, as we have seen in the past, are often temporary. They last for a quarter or two. Growth will come back, if not next quarter, in a couple of quarters. As a company, we are sitting on tons of cash, so there's no problem on that front, and we will continue to invest and build our businesses for the long run.
Okay, that's the take coming in on margins. I won't probe in terms of a particular number, but what about, Zomato's growth? How has that been in the first half? Tell us about, the cash burn, because that has halved for Zomato quite significantly in the last 6 months. But, given the kind of news flow that we've seen around it, given the mass exodus as well with, the Restaurant Association, what is the update as to how things stand here?
The food delivery business and the market in general was in a hyper growth phase for a long time, and as to get this hyper growth, companies were expanding like crazy. So many new markets were sort of we set up business in many new markets. Customer acquisition costs were high, heavy discounts were being given. So there was a bit of irrationality in the way things were being done. But that got us hyper growth, so not complaining about that. Both the food delivery market, which really did not exist 5 years ago, is today such a large market. It's such a large category which has been built from scratch, and therefore all these investments were necessary to get there. But I think slowly rationality is returning to this market. Zomato, for example, which was burning $45 million a month till a few months ago, burn is now down to under $20 million a month. Now, when you do stuff like this, of course, growth gets hit for a while. But I think that is required. There is a period of consolidation which this industry will go through. Some expenses need to be cut, some expenses need to be rationalized. So all that is what we are seeing right now. But it's only a matter of time before all this is done and growth comes back to the industry.
Okay, Hitesh, great to have you on the show. Thank you so much for taking the time out and speaking with us today. We'll chat again soon.